Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, July 12th, 2019. This video will be a quick one. I wanted to go over some long trade ideas that I found last night and this morning. I'm going to start out. I'll just start out with some of my favorites there in the apparel sector, and I'm kicking myself on this one, guys. I had meant this of the three. I was going to add this one on as an active trade today, and I started working on the post on crude oil and the natural gas short trade, DGAS, the official trade there. Took a while, and I kind of just haven't looked at these until now. So, but they're worth passing along, or I wouldn't do it. If I had a nickel for every great trade idea that I've seen that I didn't get out there in time, I just don't share those. There's no point. I hate posting hindsight stuff. So I wanted to say this still offers an objective entry. The good entry was at the close yesterday, or at the open today. It's moved up a little bit. It's up almost 2.67%. This is L brands, and what I like about it, you can see here. We have a nice divergent low recently. Let me just put on some lines here. There's your divergent low, creates this nice clean downtrend line, creates a bullish falling wedge pattern. There it is. And so, I didn't see it before the wedge broke out, but I did come across it, this one this morning. And you had a breakout here, rallied right into what would have been my first target. It's still resistance there, about $28. You can see a lot of reactions on that level to validate that. And pulled back. Nothing goes straight up forever. Remember, the move off the lows was about 30+%. See, what happens is you get overbought, and then so if you miss an initial run, you look for a pullback for an objective entry. Ideally, a pullback to support. In that case, that's right here, 24.94. So again, we're not too far off that level. If I can see another dip back to there, there's mixed things on that. I like to see, it's best when you see a stock come back, tag a support level, and then back off to the races. That's the healthiest price action. And then if that's the case, we're not going to get another shot at 24.94. So, if we pull back there, that means they're selling the pop. It would still be an objective entry, but I like that first back test. That's my favorite. And then set a stop a little bit below the support. So with that being said, here's the thing. We already hit that $28 target. So from my experience, the chances are what happens is, since you've already made a successful test and tag at that level, followed by the expected reaction, like I like to say, the initial tag of a resistance level often produces a reaction. And after that, while we could certainly continue to have a reaction there, or multiple reactions, the odds favor, because of the chart pattern, that's a pretty strong pattern, that we break out above $28.50, $28. I'm sorry, 28.05 is the exact number. And if that's the case, the next stop there I have up about 30.77 or so, and that's about a 17% gain. Again, passing it along because it is, like I said, still offers an objective entry here. PPO is turning down there on the daily time frame, but that doesn't concern me too much, again, because of the larger, more bullish pattern. And here on the 60-minute chart, the PPO is turning back up. So again, it's I'll leave it unofficial for now. I'll watch it, but I'm seeing movement in the sector, and that's why I'm doing this video. I had 1, 2, 3, 4 in the sector that I found all this morning. And this was one of them. This broke out yesterday. It was an impulsive breakout. You can see the volume bar down here. Here, let me show you that. As I tell you, ideally you want to see breakout. You want it to be impulsive, which that was. Nice big green candle, and on above average volume. And there was a nice volume stick there as well yesterday. And so follow through today. This is what a breakout looks like. Doesn't guarantee it's going to go up to my next target, but there it is, 15.29. Again, kicking myself for not getting these out there this morning. This one has moved up consistently all day. We could have bought it, not far off yesterday's close, and it continues to move up. I had two choices: either not mention these or pass them along now, maybe on a pullback here, or you take it and just now at this point. The problem is, and why it's not an official trade at this moment, we're in what I call technical no man's land. That is what I refer to when a stock is smack between support and resistance, which this one is. My support's 13.29, my resistance and next target's 15.29. We're dead in the middle of that. And what I like to do is get stocks closer to support. That way I can have my stop just a little below. At this point in time, the only objective stop, can certainly pick a numerical value, 1, 2, 3%, or a number there. But if it wants to come and back test support, I wouldn't allow, especially at this point, a back test of the wedge. The problem is you have a downtrend line comes in, they're dynamic, they're not static. 13.29 is a static price level, it means it stays the same every day. Trend line is dynamic, means every day the trend line comes in at lower and lower levels. So a back test, although it could certainly pan out, and I'll watch out for that. And if I drop this stock off my radar, I don't mention it, and you're following it, and you see it come in, a few weeks from now and back test this trend line, if it took out 13.29, let me know, because that may be an objective entry then. But as of now, the first support is down there at 13.29. Again, you can set a stop below there, but that's about a 7.3% drop, and that's why it just doesn't make the cut for my official trade criteria anymore. It would have this morning. And again, it may continue. This market's been trending, and some of these stocks tend to trend, especially after powerful breakout like this. Like I said, check marks across the board, bullish divergence under the wedge, the increased volume, and just nice clean levels to target. Ultimately this one could go up here. This would be my final target if this stock continues to gain some traction and can take out the 1530, call it 1550 level to be safe, because that's probably really more of a resistance zone, up to about 1550 there. And so that would open a door to move up to about 1735. That's CATO, that's another apparel store. TLRD, Tailored Brands, this one has not broken out yet. What you have is a pretty well-defined downtrend line, not super well-defined because we chopped through it recently, but we had one false breakout. And this is a great example of TA. I talk about this all the time, of technical analysis. If I have a trade setup like this one, I didn't find this until this morning, but if I had it before and I had a pretty well defined downtrend line like this to trigger a breakout on, but I had a resistance level above, and I'll tell you, I probably wouldn't have noticed that level before, but it is a level now. Why? Because see, all the reactions since we popped that 1625-ish level has contained all the advances. So now, and there was some minor support right there. It broke below. We had this consolidation or basing pattern. So this is really right now the more important thing to me. We had a breakout of the downtrend line, which is bullish. We had a divergent low at the recent lows, that's also bullish. And now we have this consolidation here, building energy. So on this one, and I may add it as an official trade, a pop above 1624. If you want to be safe, you give yourself a few pennies. Look at that reaction high from June 24th. That was a high of 1634. But there's been enough reactions around 1624, 1625 that I think I would say 1626. A pop above that should do the trick. And again, look for volume. What we don't have right now is zoom in real quick. You can see these volume bars. This is the nature of a consolidation right here where volume's been tapering off. So you want to see like the breakout of the trend line. You can see this volume bar right here, the gray bar, was the biggest volume that we had since this one right here, which was actually a selling climax, came right around the low. So I'll need to add a few targets for you. I haven't updated this. These are lines I've had on this chart for a long time. From, I guess I had it marked up before. First target right there, about a little shy of that 1742 level. This was a consolidation zone right here, so I'm going to put a line about 830 or so. So that the top of that consolidation zone, I would expect a reaction at the bottom, and if we take that level out, there's the top of the zone, and then there's a big old gap to be backfilled right there. So ultimately, again, it's going to take the market doing well and these apparel stores to continue to do well. This would be my maximum swing target at most, looking for a backfill of that gap up there at about 1146. So the risk reward is attractive in these, and again, it's momentum. I'm seeing a fairly consistent pattern, not all of them breaking out, but quite a few of them, and they're setting up bullishly. So that is TLRD, the third apparel store, and the last one, ASNA. Ascena Retail Group, never heard of it, but there it is, the divergent low right there, starting to move up pretty impulsively so far off the divergent low, and I have a downtrend line that comes in here. You can play around with where it comes in, probably put it right about there. Let me be very clear on this one. And if I don't mention, anytime you see a penny stock, a stock trading below a dollar, even a lot of stocks down that $1, $2 range, there's typically something wrong with them fundamentally. And now I haven't done any due diligence, and I would suggest you do that. And if you were to take really any stock, if you have the time, if I'm trading a $50 stock, I know it's a large cap or a mid cap, and I know the business model sound. I don't need to dig into the fundamentals. But if I'm going to trade a penny stock, this one's trading at 64 cents. This store, like a lot of retail stores and apparel stores, is most likely on the path to bankruptcy. When a stock drops below a dollar, especially gets down to 50 cents, there's problems there. They face a delisting, number one, if they trade below a dollar too long, so I just want to point that out. Now, that being said, you could get a nice short squeeze out of this, but I guess what I would say to you, I mean, this is from experience, don't put any more money into this stock than you are willing to lose. Penny stocks are your Vegas money. I shared, I'll get to it again here, another pot stock set up today. It's a penny stock, high risk. The reward potential is really high, and the risk potential. So I just wanted to say that. And so don't ever buy a penny stock and then be surprised if you wake up and the stock is down 50, 70% or more the next day on a bankruptcy filing or rumors of a potential bankruptcy filing. That may already be in the talks for this one. Again, I don't even know what they, I've never heard of that company, but it is also in that same sector, apparel store. So if it gets, if it can continue to run up here after the after the divergent low, target the downtrend line and that 97-cent level. Doing so from where we're at now, it's hard to find a really objective entry right here because it's moved up quite a bit, but that's about a 50+% gain right there to the intersecting downtrend line and 97 level. On that as well, a lot of companies, when they drop below a dollar, the major shareholders, the insiders of the company, will do all they can to get that stock, purchased to whatever they can, shenanigans to lift it above that $1 level. Because again, if they trade for too long under there, they face a delisting. So that's another thing that might get that stock back to that and above maybe that $1 target level. And if it can pop above there, that would be bullish too. Maybe there's more upside. But again, that's the most speculative of all. All right, let's look at a few more. Kind of a eclectic mix here. GYTO stood out. This is a gold stock that recently broke out of this bullish falling wedge pattern, ran up here to what would have been my first target. I didn't have it on my radar before. I would have shared that, and it's actually, it's not comfortably above there. This might be a momentum fueled overshoot. I had the first target resistance around 123. It's at 125 right now. If and when the charts are gold firm up in the gold mining sector itself, this one has a lot of potential. But again, low priced. It was recently under a dollar. It regained that dollar level, and you can see it's been moving up pretty impulsively since. And you can see my targets right here. I have a bottom of a gap about 185, and like any low price stock, the risk reward is high, meaning the potential for loss is above average and the potential for gain. So the easy way to do that without getting wiped out if this company goes away is just take a small position. It doesn't take a lot. You can take a fractional position, a 1/4 size of your normal position, because in this one, if it goes up to where I think it's going, where the charts indicate, that's a 50% gain right there to the bottom of the gap. If it happens to enter the gap and make a gap backfill, you're talking 122%. And ultimately, if it comes up here to what would be at this point in time my final target, I'll have to sharpen my pencil and look at the longer term charts, but that's about a 217% gain up to the $4 area. Pretty good resistance. So there's a speculative trade for you. Right now it just doesn't make the cut for an official trade, but I figured I'd pass it along. Another speculative one, lithium stock here, LIACF, American Lithium. It's coming down. There's a previous reaction low back here from 2017. Those are usually natural support levels, reaction lows. It popped up to what right here is the first resistance level, about 17 cents. Here, I'll round that off for you, make it look clean here. 16, 17. There we go. Some resistance there and a downtrend line, not super well defined, but if it pops that downtrend line, it's probably going to run from there. And again, very low priced, very aggressive, or let's just say speculative. So again, pass if that's not your cup of tea. All right, next up, ooh, I like this one. Weight Watchers. Had a downtrend line right here, pretty fairly well defined. Nice divergent low. I love those divergent lows. We had a breakout, came in, back tested at low levels, made an almost double bottom. What I like about it, I love to see this, because usually instead of making a double bottom, you'll do this. This is a stop raid. They'll come in, undercut the lows, shake out the last of the weak hands, suck in a few more shorts, and then reverse it. So that's what happened on the back test as well. So you have several things: breakout, back test, undercut to new lows, which was recovered, which is bullish because that's a failed breakdown. You had the positive divergence down here, and if you look at it this way, this is a nice big old fat basing pattern here, bottoming or potential basing pattern, and we just broke out of it. Yeah, there were some reactions here, we need to clear that, but most of the reactions occurred at the top of that box, and there's a big old gap to be backfilled and another downtrend line that comes in roughly there. So the upside potential on this one to the downtrend line, of course depending where it is about 14%. And you could draw the bottom of that. You could add a line right there to the the bottom of that candle there if you want. So let's just say 14. I would expect it to probably overshoot a little, come up here to maybe about 22% upside. And if that gets taken out, there's downtrend line. If that second downtrend line gets taken out, possibility for a move up here to 41.38. And also you see stocks like this that are beat down. You have the potential for a short squeeze. When you have a stock that's fallen from the highs down to the lows, that thing got chopped in half about 84%, you get a lot of shorts in here. That stayed too late to the party and they start to get squeezed out. So that's another potential one there. Also, obviously they have their fundamental issues if the stock dropped from over 100 down to 15, 16, 17 bucks or whatever it is. So be careful with that. Highly speculative. This is another cannabis stock. Now I posted a chart. I should mention this. I've been bearish for quite a while. I was uber bullish back a couple years ago when most sites weren't even talking about pot stocks. We were trading a lot of the pot stocks. I mean, for triple-digit gains, one after another. Even had some official trades, but I was, got bearish at all these. We had these divergent highs, and this most recent one is where, I expected a big correction, and that's what we've had so far following this divergent high right here. So pot stocks are looking, well, they were toppy. At this point, it's starting to look interesting because $28 is a pretty solid support level there. We have potential, it's not confirmed, but potential divergence there. They may burn through that divergence if we get to 28. It could also reverse back above this 30-12 level soon and then give us a false breakdown here. That's support right there, and in which case it would confirm this divergence, and then you can add a downtrend line as well. So really you want to watch a couple ways to buy MJ, which again, if I didn't state, it's the ETF for the cannabis sector. Break above the downtrend line or move down here to the $28 level. It'd be nice, since they've been in a bear trend, to see some kind of selling climax. Big candles there, big volume. We don't see that yet. That's lacking. So this one's clearly in a downtrend without any buy signals. And again, maybe if it gets to 28, an objective entry, especially if we can see some type of selling climax or something going on, and or maybe add to a position, or wait if you want to play it safe and wait for a breakout of the trend line. So that's what it looks like on the sector. Now let's go back to one of the smaller ones, and these are the junk stocks. What I said years ago in the pot stocks is you will see the shakeout in the sector. There will be winners and losers. I fully acknowledge the potential for the cannabis industry, especially, ultimately it will be, I believe, legalized in the U.S. It's been one country around the, world, and one state after another here in the U.S. So, sooner or later they'll legalize at the federal level. So I get that, but how much of that's priced in? And then also, as I was saying before, is there'll be winners and losers in this sector. So a lot of these names that we used to trade back then for big gains, they were almost all of them were penny stocks. Even ACB, I was trading that officially on the site. It was one of my favorites. I mentioned it's both a long-term hold, a swing trade, and I held that one, made several $100. And that's now ACB. It used to be ACBFF when we started trading it on the site. But the point is that so you'll have those winners that are here to stay, and then 70-80% of these stocks go by the wayside. I talked about it at the time when I looked up and did due diligence on some of these companies. They had no proven management. They had no real office space. It was just some cases a bunch of potheads that started their own cannabis company without any business experience. So those are going away. And where I'm going with this is this one will probably go away. You're down to 28 cents. It used to be $1.50. But if you want to play, short covering rally or just momentum traders jump in here. We already had a break of the trend line there, and it already ran up to that target. And that was a 25% gain. If it can do that again, hold above there. It's back testing now, and take out that level. It might run all the way up here at about 47. But again, more than aggressive, pure speculative, very speculative. So just if you're going to trade it, keep your position size small. And you can see it also has some, most of your support's right around this level. I don't want to spend much more time on that one because that's very low price, but I'll give you another one, CNBX. This one I mentioned in the trading room today on a breakout above this trend line here. Actually, I had the trend line, I had a price alert set, so I moved it a little higher. That's where the trend line really is. So you can see we are breaking out, not very impulsive. Yesterday we had a big volume day. Today so far not much follow through, but we're poking above that trend line. It's not super well defined, so I'm holding off personally for now. But if it starts to take volume, starts to run, I could see this one easily coming up here to the 50-cent level, and that is from the trend line about a 50% gain, a little less actually, 34.5%. But there it is, and potential up there to $1. But again, this is a company that may go away, and you could wake up to a big gap down. So be careful with that. There was yesterday, what was it? The other pot stock, CBDS, which ran up, hit my first targets, coming back testing. So far, it's holding on the back test. I mean, you could, I can make a case for an objective long here. I'm just, in and out. I thought that was a quick trade opportunity. If you do take it, or you're buying this back test, just put a stop below these recent lows. We had a spike low yesterday, a little bit lower low today of about 160. If it violates that again, not good. Because remember, with a downtrend line, even if you keep back testing, you're going lower and lower and lower. So the key is keep your losses tight on this one, I think. And you buy it here at 160 with a stop just below 166. That's not bad for a swing up there, and then possibly all the way up here to this 233 level. But what I led with before getting to these is the sector. The sector's not looking hot right now. It's in a downtrend. You want the wind to your back when trading, and so I'd have more confidence in these names if I was bullish on the MJ ETF or the sector itself. All right, let's give you a few more and we'll wrap it up. VSTM, it's more of like a meh. Let's see, we had a divergent low recently. It's a biotech, and I talk about that too. The biotechs, unlike everything else, you've got to keep an eye on what do they have in their pipeline. And the problem with that is, even if you do all your due diligence, when you have small biotech companies with just one or a couple drugs or that will make them or break them in the pipeline, the problem is the news, negative clinical trials or an FDA denial or an approval, they come out of the blue, and what happens then? The stock gaps up 50, 60, 100%, or gaps down 30, 40, 50, 70%. It all depends on, of course, the individual stock. So there's that risk that you have with biotechs that you really don't have with just about any other sector, is that out of the blue, clinical trial data stuff that can just, cause these things to go up or down sharply. But with that being said, the risk reward is usually very high. And again, just like the pot stocks and penny stocks, the way to mitigate, your losses is just keep a small enough position size, because if this thing pops, the target is up here, it's at 283. So what is that? That is a move of about almost 100%, 90% if it gets there. So you can allow yourself a 15% stop on a little bit below that reaction low, or maybe all the way down below these lows. But also take a small enough position size that if it gaps down 30-40%, you're not going to have your clock cleaned, because that's paramount in investing. You cannot put too much of your portfolio into any one stock, particularly something that has the potential to gap down 30, 40, 50% or more. You'll be wiped out. You'll never recover. CVIA, Covia Holdings, what we have here is a bullish falling wedge, confirmed with bullish divergence, positive divergence there, a breakout recently, and there's one same story. You have a breakout, which is a buy signal, but in my book, you don't buy it until it takes out $2 worth of conviction, because that's a horizontal price resistance. So if it can pop above here, again, with conviction, it went above there today, but that's not an impulsive breakout. It didn't hold it. Ideally, you want to see a breakout being impulsive, above average volume, which we certainly didn't have today. You can see this little tiny volume bar here pales the last few days, and or a solid daily close above there, and that would open the door for any of these targets, possibly all the way up here, 727. But this would be my what I could tell you actually, if it's low price stocks, I'd give you a first target right about there, about 239 or so, and that would be, what is that, 20% from $2 to 240. HOV, Hovanian Enterprises. This is a home builder. I actually included XHB and ITB in my short trades idea videos. Remember, there's a big difference between a trade setup and an actionable trade. So I'm not short the home builders yet, just watching them. But here's one that's beat down, put in a divergent low recently. It's been moving up. I can't make a hard entry, and that's why I'm doing this video. These are unofficial trade ideas, although a couple of those apparel stocks, they may make it on as official trades. Either way, 1048's first target, then the downtrend line on HOV if you like that one. QMCO. Here's one I noticed today. Actually, since I found this one, actually was it last night, I had a level here at 292. You can see this one's been consolidating for quite some time, and that usually means the stock is building energy. So there you had this consolidation range, which is starting to break above today. Volume's not what I want to see yet, nor is the impulsive nature of the move. It's not impulsive enough, I should say. There was a previous consolidation range which defines pretty much the bottom of this one, and you have these reaction highs. So if you look at it this way, quite a bit of resistance here. If the stock can pop above it, I don't know what they do. I might want to look into that too. I would if I decide to take this one. But it's just worth noting, it's been over a year now pushing up against this level, building energy, trying to take that out. And if it does, I'd have to study the chart a little further, but I would say I'll give you a couple targets where this one might head. Right about, I would say there's a top of a gap and reaction low and another reaction low. So there's my first target, there's the second target there. Not one of my favorite. This wouldn't make an official trade idea, but it could run. And I'll tell you, most of the biggest trades on the site are these unofficial trades. Why? Because of risk reward. They're lower price stocks. Not they can go down a lot, but they can also go up a lot. So I share this. And you decide if it meshes with your trading style and your risk tolerance, and if not, pass on them. All right, that's it. I think that's it. Let me check. Yeah, that's it for the longs. Again, I did a video the other day, and I've been sharing quite a bit of longs and shorts on the site recently. So this video was just a few more longs that I looked at. So we'll keep an eye on those, and possibly I'll look at those apparel stocks or any of these if that stand out. They're not all high risk stocks. So if any of these make the cut for an official trade, and I can get a high probability of very objective entry, I will go ahead and add those as official trades. But as I always say, official, unofficial. If you like it, if I didn't like it, I wouldn't share it. So if you like it, meshes with your trading style, go ahead and do it, and if not, pass on it. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.